Hello and welcome. Today is the third day of January 2015. It is a Saturday. My name is Derek and welcome to the second part of the 2014 year in review video, looking today at multiple time frames for the gold chart as well as the yearly chart for the Dow Industrial Averages. For the year 2014, price action was down $18.20, closing below 1200. That was a loss of 1.5%. A 1.5% move is something that can occur on any given day, but it worked out that the year was down that, where 2013 was down 28.25%, still above the 18 moving averages of highs, which closed the year at 1139. Let's talk about this chart from the start of this, which is January 1st, 1915. But the same thing was going on for a few years before. $20.67 for gold per ounce. That's what it worked out to, at least for the coins. That was real money. Now, this was the very start of the reign of the Federal Reserve before 1915. Major hyperinflation was always regional to specific locations. Never ever has a hyperinflationary dollar collapse ever occurred on a global scale. It's at the point of a matter of when, not if, and the when should not be early 2015, and it would doubtfully be in 2015. Thus, the whole time, that was the money. Inflation was starting to go through the roof, and big green candle moving this up from 20 and change up to 35. Why such a big move? Well, they announced, as in the United States government, that it was now illegal to hold gold, whether it be in bullion form or in paper gold notes. They had to have been redeemed for $20.67 an ounce or somewhere around that ballpark. Once it was all returned, they literally robbed people of their value, increased the price to 35. And then in the early 1940s, with the price fixed now at 35, from what I've seen in the Secret World of Gold documentary, apparently German leader Adolf Hitler had his currency collapse going on. He needed gold. He didn't have any. So what did he do? He stole it. And that started World War. Price action stayed the same. Got the whole London gold pool and everything. And well, in 1968, the market was for the first time trading. And since then, you had a bunch of green and red candles. Price action did not take long to go from $35 an ounce up to $850 an ounce, basically gaining 20 times its value from 1968 to the end of 79, early 1980. So there's the gold story there. And during this whole time frame, it was within the second, third generation of humans that were forgetting, or not forgetting, but being unaware of what real money is, thus believing these paper notes is money. And you joke around, money doesn't grow on trees, but no one really knew where it actually came from. Just, well, that was money. Typical failed breakdown, fast move to the upside within the charts. And now you have a situation where after, 10 straight up periods in a row, 2 down moves. Question is this going to be coming to some sort of retracement? And if so, what kind of target levels will be in play? Now that it's had a little bit of a correctionary move, any 61.8% push above that would set up, of course, a high probability of breaking resistance, testing new areas. Again, it's only a matter of when, not if, that the fiat currency system collapses. Along the way, there will be multiple regional areas, maybe Russia first, maybe not Russia first, that will be having their currency destroyed one after another. Interesting situation. When will this happen? 2015, 2019, 2024? I don't know. Let's switch this on now to the quarterly chart. 18 average, barely declining, resisting, finding support like a thread or barely amongst this 1189 level, closing of course $5 below significant Fibonacci, but exactly at it as far as I'm concerned. You start to see any moves into the 1000 area, 1050 area. Now I'll be looking for this area to be resistance for a move to support, or a move to support first and then a move to resistance as the most probable events to take place. If it doesn't retrace much, or if on the big retracement it comes back higher, which means either A, holds 1,000, B, breaks 1,000 but quickly gets past 1130, 1150, and then it has starts to make sudden moves to the upper part of this band, definitely breaking above it. Upper band right now, or the 18 average of highs, is at 1,513, lows of 1,319. So if it's holding and staying in the 14 to 15 level, then you would be starting to say, hey, wait a second, is this the possible failed breakdown, fast move to the upside? That's what I'd be saying anyway. Whether it would be or not, I'd be saying that. Let's move this on now to the monthly chart, and we can see more barely holding on of a thread. Same Fibonacci levels from the last chart being shown in here. Support twice hit, and this level 1189, and pretty much exactly where it's at now. From these 2 times hit, it managed to make it to the 18 band for the first time since this decline occurred. For several months, it stayed within this correctionary phase, and now the decision is A, is this area going to be resistance? It's having short-term resistance right now. Or B, is this in a correctionary move, which means it needs to establish resistance? Band starts to go higher, come back, break established, multi-month bull market would then be the high probable event. But barely going below this 1189 level is by no means showing that, okay, it's over, not looking good. But like I said, clear, if it's in this 1050 area, that's a clear break of this support level. Thus, I'd be stating resistance here, support here, plain and simple. Weekly chart. And within this, gets above the band, below it. And then in here, it didn't break key support, but again, quickly above the band, but that's all it did here. And during this last run, it again resisted this part here with 1, 2, 3 support hit. Another resistance test, but barely holding on like a thread, which we see more clearly on this chart. The Fibonacci retracement within this has a high of 1920 and a low of 1130. This is the 23.6 level. This is the 38.2. So as long as the low stays in or around 1130, it needs to hold and stay above 1400 for more than a few weeks for the bear market that's been going on for several months and a couple of years to be nullified. Let's now move on to the Dow Jones Industrial Average. Much different chart on the yearly. The year closed with a gain of about 1250. That's up 7.5%. 2 all-time highs, up 26% the year before, and it was the 6th year up in a row. Now, if you would have went back to March, April 2009 and said, this will be the first year of multiple up years, I'm going to say at least 7, because 2015 is going to be an up year, and that it's going to break the key 14,000 resistance and break 20,000, you'd kind of laugh. But that's exactly what's looking to be in play. In here, we have multiple losing years. The last time before there were multiple losing years, back in here. I got some interesting stats that I want to go over regarding up years, down years, and how price action has played within the respective 18 average band. So let's bring them up. Dow Jones Industrial Average in silver. So on the 100-year chart, 67 green candles, 33 red candles. So 67% of the time, 2/3 of the time, it's an up year. For silver, I got 85 years because a few of the years there was no trading moving at all, so I'm not counting those. 45 up years, 39 down years. There was one break-even year where it actually moved. And when you're talking about 30 cents, 50 cents, it's not hard or that big of a surprise to have a break-even year, but a much lower percentage to say the least. Now, within the 18 average total, there's 82 because I'm not counting anything in here. But within the 82 years that I got the 18 average, 71 times it has had a rising 18 average low, which means 11 times a declining one. 18 average of high has also risen 71 times, 87%, and the close has been rising roughly the same at 72. Now for the silver, I got less of them again because of all the years where there's not much going on. 46 or 65% of the time, it is above the 18 average of lows. So 60% roughly uptrend, 40% downtrend. Bigger difference to say the least. As far as where price action is, 79 of the 82 times it has been above the 18 average of lows. So that means 3 times it has closed below it. So where are the 3 closes below the 18 average of lows? Well, there's nothing in here. There's 1, 2, 3. There has really been one close. I guess if this year doesn't count, it'd be right in here. But this is it. Since the 1930s debacle, it has, with the exception of this year in the 70s, been above it every single time but once. Above the 18 average of close 85% of the time, and it spends 3/4 of the time above the 18 average of highs, whereas silver 80% of the time it's above the low compared to 96. 62% of the time it's above the 18 average of closes compared to 85, and half the time compared to 3/4 of the time it's above the 18 average of highs. Now when we look at yearly charts, priced in fiat debt notes that of course would have to span back to the mid-tens of the previous century as well, you expect price action to do one thing, and that is have a look, something like this where it just keeps going higher as the currency is getting destroyed. But as I take a look at the yearly chart for silver, seeing several red candles, seeing a clear sideways action going on since 1975, well, it just shows more of the manipulation within the system. Of course, the system, how things are being traded. Okay, that'll be it for this part number 2. Part number 3, we're going to take a look at currencies mainly. We're going to take a look at the US dollar index, the Canadian US dollar cross, the Russian ruble US cross, the silver chart priced in rubles, as well as crude oil. That will be for Sunday. So thank you for tuning in. Take care.